When getting a car loan, the process is firstly the negotiation with the dealership, where they provide you with the length of the term, the financing interest rate, and the cost of borrowing amount. That all factors into how much your bi-weekly or monthly payments will be on that car. However, that monthly payment scheme is a reflection of the borrower's current and perceived future income. Sometimes, things happen that change how much a borrower can feasibly pay. If the car loan does start to slip, meaning the borrower misses a couple consecutive payments, the financing company can take steps to enforce on the loan. Typically, the agreement that the borrower signs at the dealership for the financing arrangement factors in situations like the borrower's default and provides that the financing company can seize the vehicle to then sell it and use the funds to satisfy the debt and any further accrued amounts. While that might seem like a good outcome to those who can no longer afford payments and want to just dispose of the vehicle, this comes with drawbacks, such as the fact that the car may be sold at a lower price than the owner may have anticipated. Even worse, if the car is sold with a deficiency, meaning the selling price is lower than the value of the debt, the financing company can still proceed to get the remainder from the borrower as a condition of the standard financing agreement. A rather common situation the borrower might find themselves in is with regards to the repossession process. Often, there might be an inclination for the borrower to hold on to the vehicle as long as possible, as vehicles are frequently used to access places of employment that can then generate income to pay off the delinquent car loans. However, the option exists for the borrowers to voluntarily hand over the car to the lender, which has the benefit of reducing the costs that the lender incurs to repossess the vehicle, costs that are subsequently transferred to the borrower in default. The alternative is involuntary repossession, which happens without the consent of the borrower and may catch the borrower off guard. For example, the repossession attempt may take place while the borrower is parked at work. In these stressful situations, the borrower may, to their own detriment, block the repossession efforts, which only incurs further penalties and cost consequences. If the car has been repossessed, the next step is to work an agreement out with the lender to rectify the arrears on the loan and pay off the repossession costs, if any. This is not a guarantee, however, as the lender does not necessarily have to negotiate with the borrower. There's also the ability to buy the car when the lender puts it up on auction. As it should be made clear by the lack of guaranteed options, rectifying a deficiency with a car loan is far more advisable to waiting for a full default. If the repossession does take place, credit score will be severely impacted, so it's important to keep open lines of communication with the lender and ensure that costs are minimized at all steps of the process.